Alright, lock in and listen closely because this is one of those videos that serious penny stock investors wait for. Right now, while most people are distracted chasing already overextended stocks, there's a sub 0.10 penny stock trading around the $0.04 range that has quietly positioned itself in some of the most powerful growth industries on the planet. We're talking about security, automation, robotics, and next-generation technology that businesses and governments are actively spending money on. This is not hype for the sake of hype. This is a deeply beaten down stock with a real company behind it, real operations, and a real turnaround story that could result in 5x, even 10x upside if execution continues and sentiment shifts. In today's video, I'm breaking down GuardForce AI, a penny stock that has already proven it can trade much higher in the past, and that is now rebuilding itself from the ground up. We'll also touch on another closely related small cap name in the same space to give you context and comparison. This video is a must-watch because these are the kinds of stocks that move fast once volume comes in. When penny stocks wake up, they don't give polite entry points. They gap, they spike, and they leave people chasing. So if you want to be early instead of late, stay with me all the way through. Before we go any further, do me a quick favor. If you're serious about penny stocks and high-risk, high-reward opportunities, hit that like button. Let's push this video to 500 likes so YouTube knows to show it to more investors who actually care about this space. If you're new here, subscribe to the channel and turn on bell notifications so you never miss another deep dive like this. I cover speculative stocks, small caps, and aggressive growth ideas consistently, and you don't want to miss what's coming next. Now, quick but very important disclaimer. I am not a financial advisor. Nothing in this video is financial advice. This content is for educational and entertainment purposes only. Penny stocks are extremely risky, volatile, and speculative. You must do your own research and never invest money you can't afford to lose. All right, with that out of the way, let's get into it. Let's start with the main focus of today's video, GuardForce AI, ticker symbol GFAI. This is a company that a lot of newer investors misunderstand, and because of that misunderstanding, the stock has been left for dead. GuardForce AI operates in the security, cash management, and automation space. Historically, the company was known for physical security services and cash logistics, particularly in Asia. That alone is already a multi-billion-dollar industry. But what makes GuardForce interesting today is the direction management has taken the company in over the past few years. GuardForce has been actively transitioning toward technology-driven solutions, including automated security systems, smart safes, robotics, and data-driven services designed to reduce human labor and increase efficiency. In simple terms, businesses and institutions want to move away from expensive, labor-heavy security models and towards smarter, automated systems that operate around the clock. GuardForce is positioning itself right in the middle of that shift. The industry opportunity here is massive. Global spending on security services, automation, and smart infrastructure continues to grow year after year. Cash handling, logistics, retail security, and institutional protection are not optional services. They are mission critical. Even during economic slowdowns, these services don't disappear. What changes is how they are delivered. Automation, smart devices, and integrated systems are replacing older, less efficient models, and that's where GuardForce is trying to capture market share. Now let's talk about why this stock is so heavily undervalued in the eyes of many investors. At its current penny stock price, the market is essentially pricing GuardForce as if the company has no future. That's despite the fact that it has ongoing operations, international exposure, and a clear strategic pivot. The stock has traded well above current levels in the past, which tells us one very important thing. The market has already assigned this company a much higher valuation before. That doesn't guarantee it will happen again, but it proves that higher prices are not hypothetical. From a valuation standpoint, GuardForce's market cap is extremely small relative to the size of the industries it operates in. This is common with penny stocks that have gone through restructuring phases. Dilution, poor sentiment, and past execution issues crush the share price. But valuation is forward-looking, not backward-looking. What matters now is whether the company can stabilize revenue, manage expenses, and show a path towards sustainable growth. Looking at recent financial trends, GuardForce has been working to streamline operations and focus on higher margin services. This is a key detail that many people miss. Low-margin legacy services drag companies down. Higher margin technology and automated solutions are what drive re-rating events. If GuardForce continues to shift its revenue mix in that direction, even modest top-line growth can have an outsized impact on profitability and investor perception. Partnerships are another critical piece of this story. GuardForce has worked with financial institutions, commercial clients, and infrastructure-related customers in the past. In this space, one meaningful contract or partnership announcement can completely change the narrative. Penny stocks don't need dozens of deals. They need one or two that prove the business model works. Once that happens, Volume comes in and price follows. Upcoming catalysts are where things get interesting. Investors should be watching earnings updates closely, not because they expect perfection, but because they want confirmation. Confirmation that revenue is stabilizing or growing. Confirmation that costs are under control. Confirmation that management's strategy is not just talk. Any positive surprise here can act as a trigger. On top of that, expansion into new regions, additional automation deployments, or strategic financing that reduces balance sheet pressure could all act as major catalysts. Analyst coverage on Guardforce AI is extremely limited right now, which is exactly how early-stage penny stock opportunities usually look. In the past, when coverage has existed, price targets were significantly higher than current levels. Analyst sentiment can change very quickly once liquidity and fundamentals improve, and when it does, retail investors usually chase. Now let's talk honestly about why Guardforce AI could go parabolic. This is not about pretending risk doesn't exist. The risk is very real, but the upside comes from the asymmetry. At a few cents per share, the downside is defined by your position size. The upside, however, is open-ended. If sentiment shifts, then the market begins to view Guardforce as a legitimate automation. In security play, rather than a struggling legacy company, re-rating alone can drive multi-X gains without the business needing to become perfect. Now, as promised, let's briefly bring in a second stock for comparison and context, Iveda Solutions, ticker symbol IVDA. This is another small-cap company operating in the smart security and surveillance space. Iveda focuses on software-driven security solutions, including video analytics and smart monitoring systems used by enterprises and government entities. The reason I mention IVDA alongside Guardforce is because it shows how the market values similar businesses differently based on narrative and execution. Iveda has real technology and real use cases, but it has also struggled with revenue growth and consistency. When IVDA announces a government contract or partnership, the stock reacts immediately. That's the key takeaway. The market is hungry for confirmation in this sector. Guardforce is operating in a similar environment. If it can deliver a comparable catalyst, the reaction could be just as aggressive, if not more so, given its lower starting valuation. Comparing these two companies helps investors understand that Guardforce is not alone. This is a broader industry trend. Automation, security, and smart infrastructure are not going away. The question is not whether these services will be used, but which companies will execute well enough to survive and thrive. Penny stocks that prove they belong in that future tend to reprice very quickly. Now let's zoom out and talk strategy. These types of stocks are not buy-and-forget investments. They require monitoring, they require patience, they require discipline. You do not go all in on a penny stock. You size your position responsibly, you watch for catalysts, and you react to new information. That's how experienced investors survive in this space. The reason videos like this matter is because by the time a stock like Guardforce AI starts trending on social media, the easy gains are usually gone. Early research is uncomfortable. Prices look ugly. Sentiment is negative. That's exactly when opportunity exists. Not every stock will succeed, but the ones that do can more than make up for the ones that don't. So let me ask you now, out of the stocks we talked about today, which one is your favorite? Do you think Guardforce AI has what it takes to make a real comeback? Or do you see more potential in other small cap security and automation plays? Drop a comment below and let me know which stock you think has true 10x potential. Rank them from most bullish to least bullish. I read the comments and they help guide future content. If you found value in this breakdown, hit the like button. Subscribe to the channel if you haven't already. Turn on bell notifications so you don't miss upcoming videos. And if you're active on Twitter or X, follow me there for real-time market updates, charts, and news as it happens. And remember, one last time, this is not financial advice. Always do your own research. Manage your risk. Stay patient, stay disciplined, and stay focused on the long game. The biggest winners in the penny stock market are not the loudest or the fastest. They're the ones who are prepared before the move happens. I'll see you in the next video.